All right, guys, welcome to another live stream. Welcome to another live stream. The markets recover fairly quickly. We were down like 20 to 30% in the stock market, in the crypto market, and we're pretty much back at where we were at the time of the crash on Monday. Now, for the crypto market, it started during the weekend. And on Monday, it was more of the stocks because crypto is 24/7. The stock market, we have the pre-market in the morning. So that's like I think like from 6 to the bell, which is 9:30, and then 9:30 to 4, or is it 4:30? No, I think 4 to 4:30 is after hours, or 4 to like 7 is after hours, but it's not 24/7. So we had a crash in the market for stocks on Monday, and crypto was signaling that it was going to crash more on Monday as well. Cryptos fell 20 to 30%. Actually, I would say they fell around that 30% mark. Stocks, I think, let's just take NVIDIA for example. NVIDIA was at around 105 to 110, 115, and it came all the way down to I think 90, 95. So around a 10 to 15% drop for NVIDIA, and similar to other stocks. I think Intel dropped like 20 to 30%, and we bounced back. We didn't bounce back all the way, but I know for cryptos, a lot of altcoins bounced back 20 to 30%, specifically the AI cryptos. Bitcoin, it dropped all the way down to 49,000. And right now, we are, Bitcoin is sitting at 55, but it did go back all the way to like 56, 57. So, we had a sharp decline, but it was it was like a V-shaped recovery, very quick. And I kind of figured that this was going to happen because, like I said, we have so much bullish news, especially for the crypto market. Like I said, we're already past the halvening. So after every halvening, it's very bullish for crypto, for Bitcoin mainly too, because that usually starts the bull run. But for altcoins as well. So yeah, we have the halvening, we have interest rates are going to get cut, and then we have institutional money coming into the space. We have billions of dollars going into those ETFs that we spoke about, and yeah, I think it's just a bullish time. So I really didn't think that crash was going to last too long. But if you see what the media does, news outlets, they always want to make it seem like we're going into a recession, and we could very well go into a recession, but I just think it's going to take some time before we get to that point. I don't think it's going to happen specifically for crypto in the next 6 to 12 months, just because that's typically the most bullish times after the halvening event. So yeah, I think you should have taken it. Those are the times that you need to take advantage of the market, right? Most people complain and they say, "Oh, I want opportunities to buy an asset at a lower price," but then when they get the lower price, they don't take any action, right? They don't make any purchases. They don't have any money on the side to make those purchases. They don't have any money in their brokerage account. They don't have their brokerage account set up so they can make those purchases during those crashes, right? Because typically steep crashes like that don't last that long. So you need to have your money ready on the side. Again, you need to have your list of assets that you want to buy when they go on discount. That way you can purchase them, right? So yeah, I typically I don't, people are always like, man, if only I could have bought this at a lower price. And they always end up getting a lower price, but nobody ends up buying. In these next couple of months, I would say in September, October, let's just say September through the end of the year, in my opinion, we're gonna see crypto go a lot higher, right? And that's the time that you're going to see a lot of people buying crypto. They're going to be talking about it on Twitter. You'll probably hear your family talk about it when the price is up, and then they're going to be asking, should I purchase crypto right now? Is right now the time to buy? And again, you don't want to purchase things when they're on the up. You want to purchase things when they're on discount, right? It just makes sense. That goes with everything. If you go to the grocery store, right? People are always looking for a buy one get one. All right. If you go to buy in electronics, you're always looking for that discount. Well, it's not any different with investments. You want to make sure that when those crashes take place, that you're able to purchase them. Now, one of the main reasons why people don't purchase assets when they fall is because they go with what people say in the media or on social media, and they're really not invested in the research part of getting into an asset. So, like I said, you should have a list of assets. I would say at least 5 to 10 assets that you say, okay, and maybe you have a position in them already, but maybe you don't have a position in them, and you have them written down 5 to 10, and you have your targets, right? You say, okay, this asset is valued at this valuation, and if it comes down to a certain price point, I'm gonna pull the trigger. I'm gonna buy this amount of shares, right? And so on and so forth. Maybe you have multiple different price points that you say, okay, I'm going to buy this asset. If it gets to, if it gets to 90, I'll put 5,000 in. If it gets to 80, I'll put another 5,000 in. And that's what I have to get better at that too, because this recent crypto crash, I dumped a 10K into the market, and I didn't wait for the whole pullback. I definitely got it on a really good discount, but I need to work on dollar cost averaging in. But for me, so the reason sometimes why I don't do that and I don't piece it out and I don't say, okay, I'm going to put 5,000 on Monday and then I'll wait to see if the market crashes a little bit lower to put the additional 5,000 in. The reason why I don't do that is because I kind of, for the assets that I get in, I already have a price target on where they're going to go in the future. So whether I get it at $90 or 75 or $80, it doesn't really matter to me, at least, because if it's going to go to 200 to 300, that $10 to $15 difference, yes, you would love to time the bottom, but for me, it's just getting into the asset and then holding on, so that way you can gain from the upside, right? I typically don't try to time the market because I've tried that before, but I'll probably start implementing some of it. Because typically when I go into position, I'm putting thousands of dollars in, so I could probably piece it out. So let's say, if I'm doing a $10,000 position, I could probably put $5,000 one day and wait a couple of days to see if it crashes a little bit more, and if it doesn't, just buy in at a higher price, right? As long as I know, as long as I have research that suggests that the price is going to be a lot higher in the future, I don't really care, if I get it $1, if I pay $1 extra or pay $1 less, it really just doesn't matter. So, but yeah, I think most people miss out on those opportunities, or they just end up buying at a higher price. And again, it's because you don't write down the assets that you want to purchase when these occurrences take place, right? You don't know when a crash is going to happen. We didn't know that the whole thing with Japan and all that leverage and all that other stuff, it just these opportunities just come out of nowhere, and you need to be ready to take advantage of those opportunities. So I think that's one of the main pitfalls when it comes to investing, is not having a plan, not having the assets that you want to purchase, and then also having the money too. I wish I think everybody runs into this issue where it's like, you wish you had more to put in. I'm always like, if I have extra money, I like to invest. I don't like to save money. So any additional money that I have, I'm always putting into the market. So I always, most of the time, I'll have that problem too, where I don't have any additional money in the investing bucket to throw in, because I'm always throwing into the market. But I think that's a good problem to have if that's your case. I think the problem you don't want to have is you don't buy at these low prices when we have these discounts occur, but then September through December, when Bitcoin reaches 100K, you're like, should I get into the market? Is now a good time? When right now it's at 56, 57, right? And I'm not saying to get into BTC. I'm just saying if you're in the crypto space, you could apply it to NVIDIA. You can apply this to Tesla. Right now, like I was saying, NVIDIA is sitting at 107, right? It just did its stock split. If you look at all the companies that are in the $1 trillion valuation, they're trading at $300 to $500. NVIDIA, in my opinion, is not going to be any different. So in the future, I think NVIDIA will trade to $300 to $500. So you look at the market cap and you say, okay, right now it's sitting at $3 trillion. For it to trade around that, $300 to $500 mark, how much market cap is it going to be at, right? And that's going to probably take it to a $10 trillion market cap. And then you say, okay, is that feasible for a company like NVIDIA? Well, it's already at $3 trillion. Does it have sales? Does it have new technology coming out to support that increase from $3 trillion to $10 trillion? In my opinion, the answer is yes. So, and it could happen, by the end of this year. It could happen in the next 2 to 3 years. But again, we have a lot of bullish catalysts coming up that suggests that NVIDIA will be a $10 trillion company and possibly a lot more. All right. So yeah, I just wanted to say that, I just wanted to come on and say the market has recovered. Just remember these situations for the next time, and you can see, okay, if the market, you want to ask yourself, if the market dips, is it because of headline news that it's in the media that really doesn't make any sense? Or is it something fundamentally wrong with the company that you need to take a extra look at what you're invested in to see if you need to reallocate that investment to another asset? All right, so there's market manipulation or external factors that move the market, or there's something that's actually wrong with the company. And a lot of the times it's just market manipulation or some news in some other country, or just something with the economy that doesn't really have to do directly with the company. And you have to discern from that, right? And say, okay, this price decrease has nothing to do with this company, this asset, this stock, this crypto. And now the asset is trading for a 30% discount. I think it's a good time to buy, right? That's how your logic needs to be. Instead of, you see something crash and then you go to Twitter or you go to social media and you just see the headlines and everybody's like, okay, we're going into a recession. So what do? You just save your money, or you just leave it in the bank. You don't, you don't have it in a brokerage account ready to go. I just, you're not going to build money if you don't buy during these opportunities, right? 20, 30% discounts. And in my opinion, a lot of these assets are already on discount. So you're just attacking an additional 20 to 30% that you could get lower. And maybe you already have a position and you lower your cost basis, right? Maybe you bought NVIDIA at 120. Now you could buy it at 95 and maybe lower your cost basis to 105, 110. So make sure you're taking advantage of market dips. and make sure you know why the market is dipping, and ask yourself, does it have to do with the asset that I'm invested in? And if it doesn't, you definitely don't want to sell, right? You definitely want to, at minimum, you want to hodl, because people do that too, right? People will sell their positions during crashes like that. They're very sharp crashes. You see everything 20 to 30% down, and then people end up selling because they're like, well, at least I preserve. At least I'm preserving. If I lost 30%, at least I'm preserving the additional 70%. So they just end up selling, right? But then you have instances like this, which happen all the time. In a day or two, the market recovers, and you get a 20 to 30% jump, a V-shaped recovery, and then you're kicking yourself and you're saying, "Oh, I should have held," and better yet, you should have maybe dollar cost average, and then also you should have been a lot more knowledgeable about the asset you're in to know that you didn't need to sell because there was nothing wrong with that company, right? But yeah, that's pretty much it today. I just wanted to say that the market recovered. We may not go into a recession, and don't get scared when stuff like this happens. Look at your portfolio, look at your assets, and say, does this crash have anything to do with the fundamentals of this company? If not, at minimum, hold. And then if you have dry powder, extra money, go ahead and add to those positions if you see fit, right? But yeah, that's pretty much it. Make sure you guys go follow me on Instagram, Mr. Financial Nutrition, TikTok, Financial Nutrition, and I'll see you guys on Friday. Take care.